Hey guys, welcome to another weekly focus, and I'm super excited today. And it's not because I took any trades that went into like crazy profits. It's just because I've been able to sit on my hands and I've not done anything. And while doing my back testing and just looking at price and looking at the changes on how prices change over this 2-week period, I'm super excited just because of the clarity and how detailed you can look at these prices and actually see where you can avoid taking losses. So for my trade recap thing, there's nothing to show, and I'll just show you guys from last week's trade recap thing as well. So looking at this, here's my gold stuff. There's no trade taken, so I didn't take any trades. That was March 14, the last one. US30, same thing, I didn't take anything. So if you guys remember, ever since I had this loss, ever since I had these losses on all my indices, I haven't really traded. So it's been like 2 weeks and I'm just sat and looking at prices and seeing how things are unfolding. So I haven't taken no trades. NAS100, same thing, and same thing on the S&P500. So it's just been the same thing, just sitting and watching and seeing how price is unfolding. Alright guys, so that's a trade recap thing, and there's nothing to show, and I'm like extremely happy because I've been able to sit on my hands and just see how price is pulling back. Alright guys, so that's it for the trade recap thing, and let's look at the DXY. Okay, so back to what actually matters and back to what actually makes sense. So first thing, when you look at my price charts right now, you realize I've changed the levels I'm looking at. And I explained this during one of my videos on psychological levels. So when you move to higher time frames, you have to switch the psychological levels you're looking at. So I think for the DXY, I still have it on the same levels, but when you look at the S&P, NAS, US30 and gold, I've switched those levels because we're playing with like bigger time frames now, and you can use the same psychological levels you use on the 4-hour chart, or let's say on the daily chart. You can use the same psychological levels on the monthly chart or a 3-month chart. It's not going to work. It's not going to hold it for you. So I've switched those levels, and if you want to look at those levels, just keep watching, and then once we get to those pairs, you have a look at it. So let's look at the DXY again, bigger picture thing. What's happening on the DXY? Where is the DXY at currently? So let's use this right here. So you have this beautiful trend line. So you can tell just from the way price is moving, the DXY is still moving to the upside. So we still have this bullish momentum on the DXY. So looking at it from the trend line point of view, you can see how price is moving. It goes up, there's a pullback to this trend line, there's a move up. So normally you're expecting prices to come back to this trend line, and then you can see prices moving again to the upside. Now this hasn't been the case. The reason is, now look at this. When it comes to psychological levels, you have this level here of 100 flat right here. So initial test, another test, another test, and right now price tried to come, but we've still not gotten to this area. So if you have to ask me, price is actually holding around this area right here of 100 flat. So there's this difficulty for price to go below 100 on the DXY, and if this keeps happening, where there is this difficulty for price to drop below 100 and to have a test of this trend line, then you can see prices moving to the upside, which is the anticipation thing I've had for like 2-3 weeks now. So I'm still looking for the DXY to move to the upside. Now fundamentally, it's going to be very difficult because when you look at the tariffs and what's happening in the US, the dollar is really tanking. So technically you're looking at this and you're expecting prices to move to the upside. So I'm just going to zoom into the price action that matters for me, which is this piece right here. And quick take, I'm looking at this on the monthly time frame. So most of the analysis I'm doing right now, I'm looking at the monthly time frame. I'm looking at the 3-month time frame. So I'm just looking at higher time frames because price is breaking through like the daily, the weekly, and currently we have like the monthly and the 3-month time frames. So we look at this again. So where is price at, and where is price most likely going to gravitate to? So looking at this push all the way from 110, which was an inability, so price had this difficulty to go through 110. I was expecting prices then to move to the downside, and if it had to test certain areas, I was looking at the psychological level of 100 flat, and I was looking at this trend line thing right here. So if there's a possibility for sales to come in again, we're looking at this piece right here. So we're looking at price playing to an area like this, and there's another possibility you might see price coming back to this trend line. So those are the possibilities I have for the sells. But the overall picture thing is, you look at this massive movement to the upside, you look at this pullback consolidation range kind of thing, inability, still inability. So I'm expecting prices to move to the upside. Now, if price has to move to the upside, I'm looking at this psychological level of 110. That's an area I'll pay attention to. And I'm also paying attention to these highs right here. So there's a lot of room for price to travel, be it to the upside or be it to the downside. But when you look at it to the downside, it's not a lot. So you're looking at this piece right here. There's not a lot of movement. So price can still move to the downside, have a proper test of 100 flat, and also having a test of this trend line thing right here. So this is a possibility. So you can see price coming back to an area like this. Then after this, we're still expecting prices to move to the upside if it doesn't break through this trend line. Because if price goes through the trend line, you're expecting a retest kind of thing, and then you're expecting prices to drop all the way to 90. So that's just a lot for me on the DXY bigger picture thing. I'm looking at it again from the monthly time frame, and that's a bigger picture thing for me. So you can look at this on lower time frames. You can step back, let's say, to the weekly time frame and look at the structure on the weekly time frame. But here's my take. While you're trying to look at it on the weekly time frame, you need to understand what we're looking at on these higher time frames first. And all we're trying to do is just pick the direction thing. Once you get a direction, once price starts moving in your favor, then you can step down to lower time frames and look for entries or look for trading opportunities. Now, the DXY is not something we're trading. We just use the DXY to understand the direction of the dollar thing. And then you can step down to other pairs, which is like positively correlated to the dollar, USD JPY, or inversely correlated like GBPUSD, Euro USD, and you start doing your thing. So bigger picture thing again, you're looking at the impulse, you've seen the correction, initial attempt, inability, price comes back, there's a test of this trend line, there's an impulse, same thing, there's a pullback thing, price is coming back, there's an inability. So push again from the sellers. Can price come back to this trend line? If it does, then we're looking for buys. Can price pull back to this psychological level? If it does, then we're looking for buys again. And then if price keeps rejecting at this area, this piece right here, if we keep having the rejection at this area, then we're looking for buys again to the upside. Areas like this, psychological levels, and those are the areas I'm looking at as target points for price to move to the upside. So that's the bigger picture thing for me on the DXY, and you can step down to like the weekly time frame and all these other time frames and start looking at price, just looking at the structure thing. So how can you tell if prices started moving again to the upside? So you're looking at this piece right here, just structure, prices making lows, prices making lows, prices making lows. So once you have these areas getting violated, so let's zoom into an area like this. And I'll show you this properly on the daily time frame, because there's a trend line thing you can use. But you're looking at this piece right here. Price makes a low, it gives you a pullback. Price makes another low, price makes another low. So it keeps making this low, so it keeps moving to the downside. Now, once it fails to move to the downside, then you're expecting the buyers to step in and take prices to the upside. So all you have to do is put a trend line thing right here, which you can look at on the daily time frame. So you step down to the daily time frame. So this is what we was looking at last week. So I'll clean this. Let's clean this. Perfect. So you're looking at this on the daily time frame. So you have a trend line thing right here. So let's skip this trend line. I'm just going to extend it to the downside. So price keeps moving to the downside, making lows like this. And there's another low right here. So you're waiting for the period where price moves to this trend line. There's an inability to make a low. It's going to break, retest, and you see price moving to the upside. So I'll keep watching the DXY, and this is what I'm expecting on the DXY, but I'll look at it on higher time frames. So I'll just stay like on the weekly time frame, the monthly time frame for the bigger picture. Then I'll step down to the daily time frame to see the structure thing that price is putting in. So you might see price coming back to the upside. There's an inability, and then you get a break, retest, and you see price moving to the upside. So that's the structure thing I'm looking at on the DXY. So let's put something like this. You get an initial move, there's an inability, price breaks, and we're looking at something like this. So that's a move thing I'm expecting on the DXY, and I'm just going to keep this on the chart. So that's my analysis right there on the DXY. bigger picture thing again, look at this from the monthly time frame. Bigger picture thing, the DXY is still moving to the upside. Now, is it possible for us to see sales coming in? It's very possible. And here's the thing, there's always two sides to the coin. And if you look at price that way, then while you're looking at the possibility for you to buy, there's also a possibility for you to sell. So the only question is, who's dominating the move right now? Are the sellers dominating or the buyers are dominating? So that's all you have to do. You have to look at it and figure out what's actually in control right now. So looking at this, is there a possibility for us to sell? There's a possibility for us to sell to this psychological level of 100, and there's a possibility to even extend the sales all the way to the trend line. So once you have these possibilities, you can just brush it away. You have to look at it as a possibility and get prepared if price does something like that. So on the daily time frame, if we don't get a break thing, so step back to the daily. So on this time frame, so this is what I'm looking at and this is what I'm expecting. For price to pull back to an area like this, inability, then you get the break. So if this doesn't happen, you'll see price pulling back to an area like this, and just as this reaction, you had the sell thing, you had this crash, you had this crash, you had a pullback, you've had a crash, you could see price get into an area like this and you get a further move to the downside. So that's still a possibility. And so you have to look at it, two sides of the coin. What's in control right now? So currently, just on the daily time frame, sellers are in control on the daily time frame. So you want to respect this. So you're looking at the areas where you can see sellers reacting from. You're looking at this piece right here. So sellers can still step in from areas like this, but then on higher time frames, you start looking at the weekly time frame. So what's the weekly time frame telling you? You see the bigger picture thing. What's the weekly time frame telling you, and what's the monthly time frame telling you as well? So you're looking at this from all time frames and you're trying to make an informed decision. So you can't just scale into this piece of price action on, let's say, the 4-hour time frame, and you think you're having like a clear picture thing. It's always important for you to look at bigger pictures. All right, guys, so that's it right there. So the two psychological levels I'm paying attention to, it's 110 and 100 flat. So I haven't looked at different psychological levels on this pair for like 2-3 weeks or maybe a month even. So 110 and 100. So price is still stuck within this area right here and this area right here. So we'll keep looking at this, and if there's any changes, and then I'll let you guys know. But the bigger picture thing on the DXY, we're still moving to the upside. So let's see if price can have a test of 110. If it breaks out of 110, we'll take out these highs, and there's a possibility we might even go higher than that. So those are all possibilities. All right, guys, so that's it for the DXY. Let's look at the next pair. All right, so the first pair we're looking at is US30. And again, I'm looking at this from the monthly time frame. So just like the other pairs, I mentioned this already, just like the DXY, I've modified the levels I'm looking at when it comes to the psychological levels, because we're looking at a higher time frame. So I can't use the same psychological levels I was using on the daily and use this on the monthly time frame. It's not going to make sense. So since I'm doing this analysis on the monthly time frame, I'm looking at different levels right now. So if I zoom out like this, you can tell price is moving to the upside, pulling back, upside, pulling back, upside, pulling back. So that's it. So let's look at this. Let's zoom into this area and see what price is doing, and let's get a bias thing. So where is price at and where is price headed to? So price traded above 40,000. We had this initial move above 40,000. Price failed to hold this area right here. So I was expecting prices initially to move all the way to like 40,000, get a test of 40,000, so we can take prices to like 45,000 and then 50,000. But that was on lower time frames. Now looking at this from higher time frame, this is on the monthly time frame. We failed to, we tested 40,000, but we didn't stop at 40,000. And price kept dropping, or price is currently dropping. Now looking at this, where is price at and where is price most likely going to gravitate to? This again is on the monthly time frame. If price keeps moving to the downside, and because we're coming from 40,000, the next level or the next psychological level price can gravitate to is 30,000, this area right here. So you're looking at this as a possibility for prices to get to an area like this. all the way to like 30,000. So if price has to drop, you're looking at a movement thing to the downside like this. So there's a massive area we can play with on this time frame, and so this is why I like looking at higher time frames, and I like looking at the dynamic or the change. So before I was paying attention to like the daily time frame, and that was a period when we were just trading between, let's see, I think we was doing this buys right here. So because we was doing the buys right here and I was using the daily time frame, it was very easy for me to play with like other psychological levels or tighter psychological levels. But now I'm looking at this on the monthly time frame. If you have psychological levels here, you see how price is just crushing through. It's like breaking through these levels without any resistance thing. Now look at this from higher time frames. Now this again is on the monthly time frame. Where is price at? Where is price most likely going to gravitate to, and how can you get involved in a situation like this? So price is currently trading below 40,000 right here. And if price has to keep moving to the downside, where is price most likely going to gravitate to? It has to be an area like this, 30,000. So you're looking at this psychological level and you're looking at this trend line thing right here. So two principles. The first one, you have your psychological level, and the next one, you have your trend line. So a rejection of 40,000, and you can see price testing 40,000 and a further drop to the downside. So how do you get involved in a situation like this? There's probably two ways. So one, you wait for a pullback for price to come back to 40,000. You look for your setup. If you see your setup on your entry criteria, then you take prices to the downside. So now as you keep moving to the downside, you need to understand where you're going all the way to like 30,000, but there's this trend line thing right here. So I'm still going to repeat this. Look at this piece right here. So you had the bounce off of this area, so there's a possibility you get price moving to the downside and you get a bounce. So I want you to look at this pullback. So I want you to look at this price moving to the downside as a pullback. It's just a correction, and it happens every time. So don't look at this as price just crashing and dumping all the way to the downside. It's a correction thing, and it's gonna get to a point where it's gonna stop. So US30, NAS100, and the S&P 500, these pairs are predominantly bullish pairs. So when you have periods when price is crashing like this, it's completely okay. These are just corrections. So it's going to correct. You see price correcting. It does a correction thing. And then later on, you see the U-turn. So that's how I look at it. That's how I look at it. So same thing. You get a correction, you get a U-turn. You get a correction, you get a U-turn. And you see price moving again to the upside. So US30, 40,000, that's where we're coming up from, and we're most likely gonna head all the way to like 30,000. But because we're having this trend line thing right here, we might not even get to like 30,000, but there's a high possibility we might be testing 30,000. All right guys, so now let's look at this again. Let's give another possibility. So if price fails to move impulsively to the downside, so if price fails to crash to the downside, or the next possibility, we could see sellers coming in again, but you get, let's say, a sell, and you see buyers reacting, and that's how you get this consolidation thing that forms a range. So there's this possibility right here. So then once price gets back to an area like this, you see buyers stepping in again. So those are all possibilities. So I think, let's see. All right, not on this pair, but I think on the DXY there's a possibility like that. Let's see, yeah, right here. So you see the impulsive move on the DXY, you see the crash coming in, then you see the consolidation thing, and you're expecting prices to move to the upside. So you're looking at US30, and so just going off of this, or if I had to pick a direction thing, so my buyers on indices on all these pairs right now, simply because we're below 40,000, looking at the bigger picture thing, we might be crashing all the way down, which is just a corrective move, so we can do the buys again to the upside. So I'll look for sells on US30 if I start moving to like lower time frames. So here's an example. So I was looking at this on the weekly time frame, and I was looking at impulse correction, inability. Now we get the crash. So we're looking at this again on the weekly time frame. I'm going to respect this. So as price starts moving to the downside, you see the impulse, there's a minor pullback, you see something like this, you're waiting for the impulse, correction, impulse, correction. Once it fails to do this same thing, there's a trend line you can use right here, break retest, and you see price moving to the upside. So during periods like this, if you find it very difficult for you to interact with prices, just sit and watch how price is pulling back. There's no need for you to waste your capital thing. So you can't be wasting your capital trying to catch moves you've not prepared for. And that's the beauty about the market focus thing. Once you do the market focus, it's very easy for you to get the proper entries, and then you take the swing moves. So let's watch how this is going to drop and just see the extent to which it's going to drop. If it ends here, it's going to do the consolidation thing, and you see price moving to the upside. It's a very simple structure thing. So look at this piece right here. You get the drop, impulse, correction, and you get another push. So I'm going to watch this again, and I'll see how far price can move to the downside. Now this is really impulsive, so we'll take what price is showing us. I'll look for selling opportunities if I see a setup thing. If I don't see any setup, I'm just gonna sit. So I don't know how long this is gonna take for it to pull back or do the consolidation thing and move to the upside, but I'll be patient and see how price is gonna move. All right guys, so that's it for me on US30. Let's look at the next pair. Alright guys, so we're looking at NAS100, and I modified the levels as well, I think, on this pair. I didn't modify on NAS100. I think I'm using 10,000, 15 and 20, and then there's 5,000 below, just so you can look at the levels I'm looking at. But I think on the S&P500, US30, gold, I switched those levels already. So look at this bigger picture thing. Same thing, we're looking at this from the monthly time frame. Where is price at, and where is price most likely going to gravitate to? What psychological levels can you look at? What trend line can you play with? So going off of trend lines, you need to zoom out so you look at the entire picture thing, like the bigger picture thing. So you're looking at this move right here, pull back, pull back, pull back. You're looking at this impulsive moves, and you're looking at the corrections. So if you zoom into this piece right here, so look at this. Where is price at? Where is price most likely going to gravitate to? We traded above 20,000. We failed to move higher. We came back below 20,000. So this is currently like a no-brainer thing. So where is price headed to? Price is headed to this trend line. Price is headed to this psychological level. So if we keep selling, we should see price testing this trend line and testing this psychological level. So if the sellers keep this momentum to the downside, you're looking at the movement like this on NAS100, and this again is on the monthly time frame. So you might see corrections coming in, then price moving again to the downside. So when you move to lower time frames, because you're looking at this on higher time frames like the monthly time frame, you can then step down to like the 4 hours, the 8 hours, the daily, and most likely the hourly, and you look for continuation moves to the downside, or you look for pullbacks, so you can trade the pullbacks or the correction on lower time frames. But look at this on higher time frames first, get an understanding as to what price is trying to do. So you had an impulsive move right here, you had an impulsive move right here, and we had the crash that came in. It was a crazy crash thing. We've had another impulsive move, and we're expecting a crash as well. So this can go all the way to like 15,000. So we might see price testing this area, 15,000, and an inability of prices to go through. Then you're expecting the next movement to the upside. So that's it, just the bigger picture thing. Understanding where price is going to, then stepping down to lower time frames and looking for entries. So if I had to look at this, I remember last week I was still expecting the buys, but I had to switch my buyers again today, because you need to be dynamic with what you're looking at. So it changes every time, and again, I'm not correct all the time. So sometimes I look at prices and I think it's moving to the upside, but when you come and do like a reanalysis thing, you realize no, it's crashing. So I need to accept and take what price is giving me. So currently price is moving to the downside, and it's very difficult for me to fight this, because initially I was expecting just a minor pullback thing and for us to continue the movement to the upside. But now look at this from this time frame. You're looking at this from the monthly time frame. The bigger picture thing is impulse, massive correction, impulse, you're looking for a massive correction as well. So Coming into next week, I'm looking for sales on these pairs. If I see the sales, because now I think there's a possibility for us to test this trend line and even go lower to test the psychological level. So the psychological level here is 15,000. Once this sales come to an end, we'll head it back to 20,000 and even higher. So that's something I'm still getting prepared for, and I'm watching the pullback thing as prices moving to the downside. Look at this on the weekly time frame. As price is moving to the downside. So I had this trend line on the weekly time frame thing. So price just crushed this trend line. So we had price testing 20,000. So this was a beautiful move. Impulse, there was a test of 20,000, and price is headed all the way to like 15,000. So if the tariffs in the US and everything stays the way it is, which is not looking really good, you should expect this indices to drop to the downside like crazy. It's going to be a crazy drop, but again, this is very important. This is needed. So once you have a bullish run to the upside, you need a correction thing, and the difficulty trading the correction is you don't know how long it's going to take for it to correct, and you don't know when it's going to stop. But eventually you can use stuff like this, you can use tools like this to your advantage. You have a trend line right here, you have a psychological level right here, so you can use a couple of tools to your advantage just to gauge and just to anticipate where price is most likely going to stop, and then you get a reversal thing. So that's what I'm looking at on NAS100. So on the weekly time frame, we're still dropping, and on the daily time frame, we're still dropping. So this is what I was expecting last week. Right here, I was expecting buys off of this area if we had a rejection thing. So I was expecting a rejection right here, so we can take the buys to the upside, and this didn't happen. So I didn't take this trade. So let's clean this, take everything out. So currently price is just dropping to the downside. So let's keep this right here. Price is dropping to the downside, and if we keep moving to the downside again, you're looking at 15,000, just the next psychological level, 15,000, and you can go higher. So the reason you're going higher is because you want to be careful, so you know where this sales may come to an end. So you're looking at this on this time frame, and there's a possibility once we get to an area like this, it might come to an end, and you see buyers stepping in again. So that's it technically. So fundamentally, price is still going to do its thing. The sales might continue and just keep crashing, and again, that's fine, but I know at some point it's gonna end. So I'm paying attention to this trend line, and I'm paying attention to the psychological level. Once it comes to an end, then we can resume with the buys again. So that's it for me on NAS100. Now we'll look at the next one, which is the S&P 500. Alright guys, so we're looking at the S&P 500. So just like what I explained already on US30, I have my levels modified on this. So before I was looking at 4,000, 4,500, 5,000, 5,500, then to 6,000. But currently I've just modified this to I have 3,000, 4,000, 5,000, 6,000. So these are the levels I'm looking at currently on the monthly time frame for the S&P 500. So what am I looking on the S&P 500? Where is price, or where is price most likely going to gravitate to? And again, it's just technical analysis. We're looking at the monthly time frame, so we're way up, like way up compared to what we was looking at before, which was like the daily time frame. And I think during that period thing, we was doing the buys off of this area. So right now we're crashing. All right guys, so look at this bigger picture thing. Impulse, correction. Look at this impulse, you're waiting for the correction. So the correction currently is coming in as a crash, and where is price going to crash to? So let's zoom out and see the bigger picture thing on this pair. So you're looking at this piece right here, reaction from here, you had buyers, you had reaction from here, you had buyers. So we might see this price crashing all the way to an area like this, which is like 4,000. So that's a possibility for us to see prices moving again to the upside. So remember, these pairs are predominantly bullish pairs. So occasionally you have periods when prices crashing. These are all corrective moves. Price is going to crash, price is going to crash, price is going to crash, and you see the movement thing again to the upside. It's nothing different. It's just sometimes the crash is like really deep, sometimes it's a shallow crash, which is completely okay. You need to wait for the crash to come to an end, then you look for buying opportunities again. So let's look at this now. If you zoom into an area like this, so I had a trend line thing I was looking at right here. So price went through this trend line first, inability at 6,000, correction to the trend line, failed. So once I had this break, like the trend line got violated, and this area right here, there was an inability for price to go through this area. Now you're looking at this, price is dropping. And again, last week I was still expecting the movement thing for price to have a test of this area, which is not completely different from what I'm looking at, because if you look at this piece right here, there's a movement thing right here. Price created this highs. So look at what happened. You had price coming to the downside, inability right here, push, correction thing, push, pull back, and eventually we took out these highs. So it's the same thing I'm looking at right here. So I'm going to make this easy. You're looking at this correction thing, you're looking at these highs, and you're looking at these highs right here. Cool. You have an impulse, you have same thing. I'll say you have an impulse right here. You had a correction right here, so you're looking at the correction right here. So this correction might come to an area like this, might hold at an area like this. You might see price even going lower to an area like this, but at the end of it, you're still expecting prices to move to the upside. So that's the beauty once you look at indices. So sometimes it's really volatile, it's going to get you a little bit worried, but look at the bigger picture thing. Where is price at? Where is price most likely going to gravitate to? So currently we're trading really close to like 5,000. If we see price stalling around an area like this, so if there's a difficulty for price to go through 5,000, then at this point I'm expecting the buyers to step in for us to take prices to the upside. If price goes below 5,000, you're expecting a test of this, and you're expecting this movement thing to the downside. So that's how I'm looking at it. It's price moving from one psychological level to the next psychological level. Then I'm looking at trend lines just to help me, just to guide the movement thing. So you can look at it differently, but this is the same principles I've been using. During periods when price is moving the way I want it to, and during periods when I'm even taking losses, I'm looking at price movement the same way. You have an impulse, you have a correction. You have an impulse, you have a correction. So this is happening on predominantly bullish pairs, so it's going to move the same way. You get an impulse, you get a correction. Sometimes you get an impulse, you get a deeper correction, then you get an impulsive move again to the upside. So that's how I look at prices. So here is it on the monthly time frame. If you step down to the weekly time frame, you're looking at the same thing right here. So currently we're very close to like 5,000. So as price comes to like 5,000, I'm paying attention to this area. How is price going to react at 5,000? Is price going to break through this area? So if price stays here, this inability, I'm expecting buys all the way to 6,000. If we crash, we get a test, and I'm expecting prices to move to the downside. Then I'm going to put a trend line thing around this area and wait for prices to pull back to this area. Now this is going to be interesting, because if this happens, I'm looking at this piece right here. So you're looking at this, an inability for prices to go through 5,000, pulling back, there's a trend line. So you're looking at everything right here. So you're looking at everything right here, and you're expecting those sales again to the downside. So it's just like the confluence thing. Trend line, psychological level, trend line, psychological level, then you look for the setup thing. So let's clean this, and I'm gonna stay on higher time frames, because here's the only thing that makes sense to me. Just looking at it from higher time frames, that's the only thing that makes sense to me on these pairs right now. And I like this because it's really clean, and you can see how price is pulling back, and you start getting ready once you get the inability and you see price reversing, or you see the U-turn thing. You get the sell, then you get the U-turn. You get the sell, then you get the U-turn. You get a push, then you get a U-turn. So that's what I'm looking on the S&P 500. And again, it's very simple. You just have to wait for the pullbacks to come to an end. Then we start taking the buys again, trading the buys or trading the impulse and the correction, impulse and the correction, and taking prices to the next psychological level. Alright guys, so that's it for me on the S&P 500, and let's look at the next pair and the last one. Alright guys, so the last pair we're looking at is gold, and I haven't looked at gold I think on the monthly time frame for a long time. I don't know if I did last week, but again, I modified the levels on this one, so I'm looking at 1,000, 2,000, 3,000, 4,000. So those are the levels I'm looking at. If you look at the bigger picture thing, zoom out and you see how price is moving. Impulse, correction, impulse, correction, impulse. There might be a correction to an area like this for us to see prices moving to the upside. So now let's look at this. So let's zoom in and just pay attention to what price is doing. So look at this reaction thing right here. Inability. You're normally expecting price to crash and move to the downside. But if you have your trend line thing, price respected this. So looking at this right now, price has gone above 3,000. So we currently sat above 3,000. Price hasn't gone through 3,000 like properly, because a proper break of this area, you should see price moving all the way to the upside. So we're currently sat above 3,000. If we step below 3,000, you might see a test of this area and you see price crash into an area like this, which again is just a pullback thing for us to see prices moving to the upside. So that's the analysis right there on gold, and this again is on the monthly time frame. So just having this understanding on the bigger picture thing, it helps you, because you might use this analysis to trade for the next 4 months or the next 5 months, because on the monthly time frame it's going to take time for this to happen. So what am I saying, 4 or 5 months? You might use this analysis for the next 12 months even. So you might see a push again to the downside. You might see something like this, a push, a test, and you see price drop into an area like that. And it's not going to be anything different from what we're looking at, because if the DXY respects the movement thing we're looking at, so there's been this inability right here. If the DXY respects this and keeps moving to the upside, taking out these areas and taking out these areas, then you're looking at a pair like this, and it starts making sense why gold might start dropping to the downside. So yes, we've had this massive movement all the way to 3,000, but we haven't really gone above 3,000 like perfectly. So there's two things that can happen. Now, if you step down to lower time frames, you can tell price is giving you these corrections. So how do you get involved in a situation like this? On lower time frames, you can still look for buying opportunities because we're sat above 3,000. That's one thing. Now, as price is giving you these corrections, there's a trend line thing you can look at. So once you place a trend line right here, there's still this possibility for prices to come back to this area. So this is on the monthly time frame. It's really difficult for you to see. If you move down to like the weekly time frame, all right, now this makes sense on the weekly time frame. So remember, on the monthly time frame, we sat above 3,000. On the weekly time frame, there is still a possibility for us to pull back to an area like this. So you're looking at this impulse, correction, impulse, correction, impulse, correction, impulse, correction. So if I had to look at, let's say, positions on gold, I'll probably start looking for like the correction thing. Now, on the weekly time frame, it might be a little bit too early for you to dive in and say price is moving to the downside, because here's another possibility. On the daily time frame, as the correction starts coming in, there's a correction right here, there's a correction right here. So here there's a minor trend line you can look on the daily time frame, and this is something I've explained just with the guys I'm working with. It's called trend line mapping. So you're moving from the higher time frame to the lower time frames, and you're looking at those trend lines. So look at this now on the daily time frame. So in as much as you're looking at the bigger picture thing and you're expecting prices to drop, so on the monthly time frame, in as much as you're looking at this, so the bigger picture thing on the monthly time frame is an inability for prices to go through this area. You might see a drop, you get a test, and you get a push to the downside. Bigger picture. Now step down to the daily time frame. I don't think it's ready as of now. And the reason I'm saying so is once you do the trend line mapping thing and you start coming to lower time frames, you're looking at this on the daily time frame. Impulse, correction, impulse, correction. So if price gets to this area thing right here, price gets here, if there's an inability, then you're expecting prices to move again to the upside. Now if this doesn't happen for some reason, let's say gold gets to an area like this, there's an inability for prices to move to the upside, you get a crash. As price starts trading below 3,000, you're expecting a movement to the downside. If you get a crash of this area, so you get a violation, you get a break, then you're expecting a movement again to the downside. But here's the beauty of it, because you're looking at this from higher time frames, and if price starts violating those other levels, then you know where price is headed to. So if price violates the daily, you know it's headed to the weekly. If price violates the weekly, you know it's headed to the monthly. So that's it. Impulse, correction, impulse, correction. So on the monthly time frame, bigger picture thing, this is what we're looking at. It might take months for this to happen. 12 months, 18 months. It might even take 18 months for this to happen. But it's really important because right now we start above 3,000. If we start trading below 3,000, it means this trend line has been violated. So once I see something like this, I'm just waiting for pullbacks, and my predominant bias on gold will be to see prices moving to the downside. So looking at this currently on the daily time frame, you can stick to this uptrend, but you need to be very careful, because once we get a violation of this trend line, we're looking at prices moving all the way to the weekly area right here. So that's what we're looking at. We're expecting prices to then push back to an area like this. An inability to go above 3,000, you're expecting a break, you're expecting a retest, and price moving again to the downside. So it's gold for me is always the easiest pair to analyze, because I really don't spend so much time analyzing gold. And again, you need one perfect entry, or an entry that's close to perfect, and then you can hold it and just capitalize on the swing move for a longer period. Capitalize on the swing move, capitalize on the swing move. So that's how I look at this pairs, that's how I trade them. And I'm really not trying to get it like really complex or complicated. For me, trendline psychological level, trendline psychological level, and that's it. It makes my analysis really easy. So here's a psychological level thing I'm looking at. 3,000. If price goes below 3,000, we're looking at a test, we're headed to 2,000. Which you can confirm if you look at this on the monthly time frame right here. So look at this, you have this massive area to play with. That's a possibility, but then you need to wait for these trend lines to get violated and stuff like this. Then we get a push to the downside. So currently you need to, let's say, just look at the daily time frame and stick to the daily time frame and see what price is doing. So if you get a rejection on this daily area and inability for prices to go through this area, then we'll keep maintaining the movement into the upside. And again, if the dollar keeps getting some weakness and the movement to the downside, I'm expecting more buys on gold. Now, with those like looking at fundamentals and everything, if the DXY on the other hand starts dropping, again, let's say it keeps dropping to the downside like impulsively, you're expecting gold to move to the upside, because once there's fear and there's uncertainty in the US economy, people tend to move money like to safe havens, and gold is an example. So you could hold your buys again on gold, expecting this thing to keep moving to the upside. So I'll look at this again next week, and if there's any opportunity, once price gets to an area like this, I'll look at this, I'll pay attention to this area and see if there's a setup thing I can look at and look for buying opportunities. If price breaks out of this area, so let's look at this, price comes here, buys, there's an inability, breaks, and then I'm looking for sales. So that's how I look at it. It's just getting the direction of buyers is the first thing. Once you have the direction correct, then you can look for your setup, scale down to lower time frames, look for the confirmation, get those entries, and then you hold the position and do like a swing thing. So that's it for me. That's my analysis right there. And if you have anything different, use the comment section and let me know. And again, be patient with what you do and stay consistent, and I'll see you during the next one. Bye for now.